Good morning for today's free video, Thursday, January 9th. And the stock we're looking at right now is BIIB. If you recall, on yesterday's video, I gave you this trade, and it so happened to really pan out nicely. I mean, just a classic trade setup. Obviously, this market is in an uptrend. Hit the high up in here. We had a nice gap. Tried to fill that gap. Okay, we tried to fill the gap right here, stopped right in here, consolidated a little bit, came down right here, retested this low, and that's a classic failure, right? The market was not able to take out that low, right? So at this point, we're looking for any reason to look to be buying this market, right? Not only is this market sitting between the blue action zone, right above that 50 exponential moving average, but it creates an inside pattern, right? The market starts to contract, and we love contraction because contraction leads to expansion, right? So yesterday, right, we're looking to buy this market. Remember, we bought it 277.37, all right? 277.37, which is 20 cents above the high of Tuesday, okay? And I said that the first profit objective, well, first of all, let's start off with the initial stop loss. That's real important, right? So as you enter 277.37, I'm going to say ISL, it stands for initial stop loss, was below the low of the entry bar, right? 20 cents below that low, which comes to 273.25. All right, so look at, we were risking, the initial risk on this trade was only $4.12. I mean, that's a small loss, okay, on a $270 stock. Now, if you bought calls, what I would suggest is you buy deep in the money calls, February, all right, the February 21 expiration. Bought at 277, a couple strikes lower. Could have bought it at 270. And on yesterday's huge run up, it was about up 11 bucks. So the return on your investment, obviously, when trading options, are a lot greater than trading the stock itself, especially when you're trading a an expensive stock like this, which is quite volatile. I mean, look at the average true range is $7.16, right? So let's go further on this. So the initial risk was $4.12. The first profit target, right, I gave you yesterday was a retest of these highs right here, right? And that was a price of $282. All right, I can't write here. I apologize here. $282.52. Okay. So the first profit objective was $5.15. So not bad, over a 1-to-1 reward to risk on the first profit target. Now that's the first profit target. That's not accounting for where and how you would trail that stop up. So, as I was doing this video yesterday, the market was, what, 20, 30, 40 cents above that entry. Market continued rallying during the day, hit that first profit objective right here, and continued moving. So what I want to do is I want to take a look at an intraday chart and show you exactly what happened here. All right, take a look at this. This is an intraday chart of yesterday's price action. This is a 3-minute chart. This white horizontal line here represents the entry based off the daily chart, right? Based on the breakout through Tuesday's low, or high rather, for an entry, right? This right here is the 277.37 entry, okay? And look at how, on a 3-minute chart, the trend changed from down to up precisely when our entry was triggered right in here. Okay? So the first objective was 282.52, which wasn't much higher. 82.52, actually right in here. Look at this, right here. 282.52 was our first profit target right in here. And it's funny how it hit that profit objective right in here and kind of came down a little bit, as you can see. So that was a significant level because the prior high on a daily chart, a nice level right here. So that was our first profit target right here before we corrected a little bit and came up again. Day trading this stock, you would have been buying it right here. You would have been buying it right here. These are all nice areas, and then came down to the blue action zone again, consolidated nicely before breaking up again. And right now, as we speak, the remaining portion of the position should be trailed up to, I will go 20 cents below today's high, okay? It's always a good place for a trailing stop, especially when you get a gap up, right? We gapped up today. We opened up at 292 even. We traded down to 291.01. The trailing stop should be placed 20 cents below today's high. 291.06, it should go 290.86. 290.86 should be that trailing stop. Because if the market comes down through that level, I think we'll probably try to move a little lower. It should act as it might act as support because we'll be back down into the blue action zone. But once again, that's how I'm trailing up the remaining portion of this position. So again, this is what a 3-minute chart looks like. The trade just happened to work out very beautifully. And of course, these are what we're looking for when we see the market contract, as we saw here at a very, very logical support zone in an established uptrend off the larger time frame. Okay, and if we take it just one step further and go to the weekly chart, I mean, this market is just extremely, extremely strong, as you can see. Going back just a long time, okay, back to 2011, the market's been straight up. I mean, look at on a weekly, look at all these beautiful pullbacks to logical support levels, right? Blue action zone in here. So very interesting to see when we test these highs what the market can do. But look at this week we've got an engulfing pattern, right? We took out the low the prior week. We've taken out the high, and it looks like we're going to close in the top quarter range. So, okay, I'm rambling, so I'm going to let you go. Just one more thing before I let you go. Be sure to check out Doc's free video here. All right, be sure to check it out. All you do is go to tradingconceptsinc.com/fractal-energy-trading/ and watch his, it's an 18-minute video. It's really informative. And then he's holding a live class this Saturday, the 11th, starting at 1 o'clock. All right, so be sure to check it out. Have a profitable day, and I'll be back with you tomorrow. Bye for now.